What's up, traders? I hope you're all doing good. I'm going to show you how and why I took this short trade for 2R on a 5K account as a challenge and on gold. And I'm going to explain to you why I took this trade, the thought process behind it. And yeah, pretty simple. Let's jump right into it. Okay, if we look at the 4-hour, we can see that we have this fair value gap, price traded down into it. Also, we have this high of the breaker high towards the left, a fractal high or a swing high as well. Then on the 1 hour, we can see that we can further refine a order block, that little area, and see that towards the beginning of the new day, price traded into it, and all through Asia session, we pumped up towards the upside into the initial balance high. Now, what is the initial balance high? The initial balance high is Monday's and Tuesday's range combined. So the range made on Monday and Tuesday, initial balance high is the highest high created on Monday and Tuesday. Often one of the highs, either the high or the low, the initial balance high or the low, will remain intact for the week. But more than that in a different video. Okay, so we have that high. Now, one thing that can happen when we reach that area is either we trade out, break out, and continue going higher, or if we're close to it, we can see price sweeping it and coming back down and trading towards the downside or into the range. Just a side note, I had this high to the left. Just kept that in mind as well. So we were very close to that high. So potentially we could see price trade above it and then continue in the opposite direction. So there we see price trade above that high. Now, another thing to take note of, remember when we have consolidation, we never reverse from consolidation. We either have first a manipulation and then a reversal. So there we have a push up and then a strong break down. That was my signal to look for shorts, and I'm going to post the charts as well. And we can see what's great about this is that we have a fair value gap going towards the upside right there, and then we create a new fair value gap towards the downside. So some will call it an inverse fair value gap. I have no idea. I just know that we create a fair value gap towards the upside, we engulf it, we create one towards the downside, we have this engulfment coming towards the downside. That is then my entry. As soon as we trade back into that fair value gap, stops above the high, and I'm only looking for 2 risk to reward. That's all. Want to be in and out, get a good decent size of the move. Now in terms of take profit, we have this area right over here. So that is potentially a drawn liquidity, that fair value gap. If you look up in this leg, that is a fair value gap in the discount array. So that's a plausible area for price to return to. So if my take profit is just above it, that will mean I potentially get a good trade setup. So you can see on the next candle, we get tagged into the trade. Where is it? There we are. Now the next candle, the second, third candle, we get tagged into the trade. Now you can see that just some minor details. This candle failed to go to into the imbalance. This is into the fair value gap. This is a valid fair value gap, and we failed to go into it. When this pushes down, I'm not worried about it. I still have my area where I want to take a short off of. If price just runs without me, then it's a missed trade. But I have my limit set at that high to cover the fair value gap, and I have my stop loss above the high in case price decides to run up and mitigate something above it. But I feel confident taking a short from this area with a limit, taking then a take profit of 2R. Seeing price then stall a little bit, and this is what we then create, another valid fair value gap right over there. We see price trade into it, create a high. Potentially we can sweep that high again before continuing lower, but the idea is set and we see price trading towards this fair value gap, which is our drawn liquidity. We trade into it, out of the trade already, and then price can do whatever it wants to do with the remaining of the day. Then we can see a rejection off of that fair value gap, and then price trades all the way back up almost to our entry. But getting in, getting out, zero stress, low stress trade off of the initial balance high made on Tuesday. So let me know if you found this insightful. Okay, so let's see what happened the rest of the day. Kind of a review, just to kind of educate ourselves. So we traded into that fair value gap. We started trading back up to that high we marked, retested it, and then saw price coming down. So let's just quickly have a look at the session's opening price and so on. There's our opening price. We made a small wick towards the downside, and then we traded above that opening price. So all of this is above the opening price. So new daily buyers, they bought potentially here or sold with the opening price, they are down under if they sold. So all of this then coming back down, getting them into profit, and then back up, getting them at break even. So a little bit of a choppy day altogether. London was nice, clean. We can see some nice bullish bearish candles, and New York was very choppy, up and down, up and down. So not a lot of great setups in New York session. So glad we caught this then in London session for a trade towards downside. Potentially, what's next? What can we potentially look at for tomorrow? Okay, so on Thursdays, Wednesday's high and low becomes our reference point. So previous day high, previous day low. Combined with what happened on Tuesday. So we just mark that out, and we can see then that potentially we have a false break towards the upside. The low made on Tuesday becomes then our next drawn liquidity. So hear my story. If we false break above Tuesday's high and we break structure moving lower, and we respect bearish order flow, and we create new bearish fair value gaps, then Tuesday's low becomes my drawn liquidity and my objective. So already, if we remain bearish and we don't go up again or close above Tuesday's high, then I am considering looking for shorts tomorrow morning in London session down to Tuesday's low. So for now, depending on how price closes, obviously, but for now, with current information, Tuesday low then becomes my next drawn liquidity for gold. So something to look out for and see if that indeed is the case for tomorrow. So let's be patient. Let's wait. There's a lot of news tomorrow, so we need to be careful and stay focused and not take silly, stupid trades. Only take the best probable trades. But for now, Tuesday low becomes my drawn liquidity right over there. So that is it. Also, very, 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 very important. We traded above that high and started breaking down lower, rejecting it. So it does seem that we could be trading towards Tuesday's low. And there's no fair value gaps to react off of in this area on the 1 hour, though, on the 1 hour. So liquidity then becomes my objective. All right, guys, that is it from me. Hope you all have a great day. Bye.